Divergence is the most commonly used concept in trading, and it acts like a leading indicator because it gives a trading signal before a reversal. But sometimes we get confused about the point where we should make entry based on divergence signal. To solve the problem, we should draw a trend line on RSI also. If we get a negative divergence between two peaks of RSI, we should draw a trend line on the corresponding troughs. And if we get a positive divergence between two troughs of RSI, we should draw a trend line on the corresponding peaks. We can make entry when RSI break the trend line. The strategy can be applied to any time frame and gives around 95% correct signals. This is the hourly chart of Facebook Incorporation. We can see here that prices are going in upward direction, but RSI is giving us a negative divergence here. So, the peaks for giving us a negative divergence, this is the peak 1 and this is the peak 2. The corresponding troughs are, this is the trough of this peak and this is the trough of this peak. So we will draw a trend line to these troughs to know our best entry point. This is the trend line connecting these two troughs and this is our short sell position. Also, prices are breaking down this trend line, so this is our confirmed short sell position. We can place our stop loss level at this peak and we can go short at this point. Now see here, prices are going down, but here we are getting a positive divergence on RSI. So we'll draw a trend line on the prices. Also, we will draw a trend line to the corresponding peaks. So this is the trend line. When prices break this trend line in upside, we can make our long positions. So this was the point here where we can make our long position, but we will wait till prices break this trend line in upward direction. So this is our confirmed buying point when prices break this trend line in upper side, and we will place our stop loss at the lowest point of this downtrend. So this should be our stop loss level. Again, here we are getting a negative divergence because prices are going in upward direction and RSI is going downwards. So it is a negative divergence. We will draw a trend line on the troughs of RSI. This is the trend line and RSI is breaking down this trend line at this point. So this point is our entry point for our short sell trade and this was the point. So we can make our short sell position here. We can see here that prices are also breaking down the trend line at this point. So this red candle is our confirmed short sell position and we will employ a stop loss level at the high of this peak. Now here prices are going downwards, but we are getting a positive divergence on RSI. So we will draw a trend line to the corresponding peaks. The two troughs that are giving us a positive divergence are these and their corresponding peak. This peak is the first peak and this peak is the second peak. So we will join these peaks with a trend line, and when RSI cross this trend line, we can initiate our long position. But as prices are still below this trend line, so we will wait for the confirmed signal. Here prices are going in upward direction. They are breaking this trend line. So this point is our confirmed buying signal and we will employ a stop loss at the low of this trough. The trend line drawn on the RSI should be in the direction of the prices. In this case, the prices are going in upward direction. So we will draw a trend line in upward direction. These are the troughs. So if we join these troughs, our trend line will also go in upward direction. Here prices are going in downward direction. So if we join the peaks of these troughs, then we will get a trend line that is going in downward direction. Again, we are getting a positive divergence here. RSI is going upward, but prices are going in downward direction. So this is the positive divergence. See, these are the two troughs that are giving us a positive divergence, and the corresponding peak of this trough is this one and the corresponding peak of this trough is this one. So we will join these 2 points and extend the trend line. Here we are getting a entry point signal, but as prices are below this trend line, we will wait till prices break this trend line. At this point, we are getting our confirmed signal and we will place our stop loss at this point. Using this strategy, we can get very accurate and confirmed signal if we trade divergence. And divergence is one of my favorite strategies, and I mostly use this strategy in intraday trading. Thanks for watching the lecture.